We want to welcome you to our short video today, brought to you by USDA Mortgage Hub. We service home buyers in all 50 states. We can be reached at 1-800-691-8826. During this short video today, we're going to talk a little bit about some USDA Rural Housing program updates that are going to be implemented October 1st, 2016. Some important updates we're going to talk about. First and foremost, the USDA guarantee fee reduction. USDA, similar to the other government loan programs like an FHA, Federal Housing Administration loan, or VA mortgage for the veterans, USDA, they all have a guarantee fee or a funding fee or mortgage insurance premium. They have different names for it, but it is a fee that is a one-time fee that is basically charged and rolled into the borrower's loan amount. The fee can change year by year depending on a variety of factors, but USDA has announced that starting October 1st, 2016, that is the start of their fiscal year, through September 30th, 2017, the guarantee fee for all USDA rural housing loans, purchases and refinances will be reduced from 2.75% of the loan amount to 1% of the loan amount. So that is the amount of the fee that will be rolled in or added to the borrower's final loan amount. We'll look at an example in the next slide. USDA guarantee fee reduction. Here's an example starting October 1st, 2016. This is an example for a buyer purchasing a $175,000 home. The current fee of 2.75% is $4,812. So the borrower's final adjusted loan amount would be, in this example, $179,812. Starting October 1st, the guarantee fee will be $1,750, and the final adjusted loan amount will be $176,750. So the overall closing cost reduction would be just over $3,000 in this example, which is pretty significant. This is a good positive change for home buyers. In addition to the one-time guarantee fee, USDA also announced that the annual fee, this is the monthly mortgage insurance premium. Most people commonly know this term as PMI. It's not that with USDA, but it's relatively the same thing. It is a monthly charge that is added to the borrower's payment each month. So this monthly fee, or mortgage insurance charge, as we commonly know it as, that will be reduced too, the factor that is used to determine the monthly mortgage insurance, 0.50 to 0.35%. And that is currently for the life of the loan, and it will remain for the life of the loan. So the monthly mortgage payment savings, based on the example of a $175,000 purchase price, borrowers will be looking at close to $40 a month in savings when they factor in the reduced monthly mortgage insurance or annual fee and the reduced one-time guarantee fee premium with the reduction of their closing costs. Obviously, the reduction of the amount they need to finance now of their overall loan. So when you add those both together, it'll be a monthly savings of about $40 per month, which is pretty significant. Now, a common question is, what happens to the home buyers that are going to close before the change October 1st, can they somehow take an advantage of the lower reduced fees? The short answer is no. Most people, they need to understand that the USDA program, the way it works, is a little differently from other loans in that the program requires a two-step approval process. The USDA approved lender or bank will underwrite the file, approve it, and then once they're done, finished with that, they will send that loan package to the local USDA office depending on the state and county. The USDA office will have to review the file and issue a final commitment, and that is basically telling the lender that everything's okay, you can go ahead and schedule your closing. That process, when the file is sent to the USDA office, that timeline can vary depending again on the state. Some states it only takes a day, and then there's some states where it can take a couple of weeks. Again, it just depends. It constantly changes. For a buyer to take advantage of the lower fee schedule, their loan file, basically will need to be, the conditional commitment on the file will need to be issued October 1st or later. So any file that has been reviewed by USDA before that will be on the old fee schedule. We're going to just review also just some of the basic USDA Rural Housing loan requirements. Of course, the home must be located in an approved USDA eligible location. If you have questions about that, please feel free to call us and we can talk to you about your area and talk to you about local approved locations around you. The buyer must have household income that's under the set USDA eligibility limits. Again, it's important to remember that the household income limitations do apply to all members in the household that generate income, even if they're not on the loan application. This would include maybe a spouse that's not on the loan application but has a job, obviously. This would also include maybe an elderly parent that lives in the home, is not on the loan application, but maybe they receive Social Security or disability benefits. So keep that in mind, is that the household income limits do apply to all members living in the household, regardless if they're on the application or not. There are some exceptions to this for college students living in the house. Again, you can search online for the USDA income and property eligibility calculator and the property eligibility map. USDA eligible properties, again, it's any single family residence that's located in a USDA eligible area, no matter who the seller is of the property. The property can be a listing by any real estate company. It can be a distress sale from a bank, a foreclosed property. The seller of the home is not really relevant. What's important is where the home is physically located. Single-family homes, townhomes, most condominiums that meet HUD approval are all okay. The property, though, must be in decent moving condition, must meet the HUD standards and be, again, in sound condition. This program is not for a home that needs extensive rehabilitation. It's not for any investment homes or second homes. This is not for any raw land to build your own home, no mobile homes, manufactured homes, unless they're brand new. In that case, it must be financed through the approved dealer that is selling the mobile or manufactured home. So why the USDA home loan? Some of the benefits is that it does offer 100% financing, which is an important benefit for first-time home buyers. Closing costs can be added into the loan, assuming there's a higher appraisal to support the value. An example would be if a buyer is purchasing a home for $100,000, and let's say they need $4,000 for their closing cost and all of their prepaid escrow requirements for taxes and homeowners insurance. The borrower can include that $4,000, roll it into the loan if the home appraisal comes in at $104,000 or higher. That is okay. The borrower can also have the seller of the home pay all their closing costs, up to 6%, which is generally more than enough. So there is some options there as far as closing costs, and you can do a combination of both of those. You can have the seller maybe pay half of it and roll in the rest of it into your loan, assuming the house appraises a little bit higher than the sales price. Doesn't have to be one or the other. You can mix and match that a little. Borrowers are not required to be first-time home buyers. The USDA loan is for any buyer, move-up buyer. If you do currently own a home now and do not plan to sell that home, there will be additional obstacles and restrictions in place. Income limits have increased for 2016. Again, just be sure to look at the calculator for the latest income limits, household income limits for your county. Low monthly mortgage insurance, or the annual fee, or PMI, whatever you want to call it, it's significantly less than FHA loans and most conventional loans, and it's going down a little bit more here in October coming up, so that'll be good. And there's no assets or savings requirements with USDA loans. Many conventional loan programs, they can require that the borrower have 3 months of reserves, payment reserves. That means after all your costs, you have to have so much money in the bank for payment reserves. 3 months, maybe 6 months, depending on the program. USDA does not have that. For home buyers that need assistance, please reach out to us. Visit USDAMortgageHub.com for all the latest information. You can also call us at 1-800-691-8826. We serve home buyers in all 50 states. Thank you for listening to this short video today. We look forward to assisting you soon.